Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go ask Slim.
Hi, I'm Steve Miller. Call me Slim. And this is the Ask Slim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week. And of course, we hope we bring lots of opportunities throughout the show. Well, this was a week of really bad news. It started out actually with horrible news, as over the weekend we had that terror attack in Orlando, killing 49 and wounding 53. In fact, some gravely wounded, and really got to send kudos to that team of doctors down there that did an amazing job pulling those people through. So just a horrible, horrible event, and that was part of what weighed on the markets throughout the week. Of course, investors focused on the Brexit. That is the UK potentially leaving the European Union, and that vote comes on the 23rd, and that is potentially a big, big market mover. The polls did show that the Leave versus Remain vote was had a slight lead, and that was kind of countered later on in the week by the bookmakers that say that it's about a 3-2 odds that they stay. So you have that conflicting information, but still you have investors really looking to lower their risk and park money and go into places that essentially can just hold their investments until you get past this. We've seen just some giant moves in some of those potential flight to safety type instruments. Thursday there was a tone change, more bad news, as lawmaker Joe Cox in Great Britain was killed, and that sort of motivated some to change their thoughts about this vote, as supposedly the killer was targeting her because of the Brexit. And so at that point, they said that the odds had improved of staying in the EU, and the campaigns were suspended, and there were even rumors of delaying the Brexit vote. So what happened was that you got a big reversal in the market on Thursday. And that really couldn't really hold, as the markets are very nervous, and our stock market then weakened again on Friday. Terror in the news, shades of 911, as the airlines took some big hits. We're going to show you those charts as we move into our best and worst of the week in just a few moments. And there's fear of economy slowing, as the UK essentially has been in a standstill. Nobody wants to really commit anything in there until they hear about the vote. So these flight to safety trades, we've seen gold move up to all the way up to 1320, and then have a big reversal on Thursday. And the U.S. dollar, this is a rare time when there's a flight to safety into the U.S. dollar and gold goes up. That has to have some people confused, but that's actually what happened. They both are reversed. Money moving into yen, money strongly moving into bonds, and again, sellers came in with the bonds down pretty sharply here on Friday. So all of this parking of money really has moved these contracts, and they most likely will remain volatile and elevated, as the VIX is, implied volatility, until we get past this vote. The vote doesn't necessarily have to mean all that much, because even if they vote to leave, adaptation of it might actually take years. So there's you could get that vote, but then everybody has to figure out exactly what that means. So we expect to see some big movements after that vote come Friday, and then we would assume that whatever extreme moves that we see will probably be short-lived. So we're gonna kind of, as far as our trading goes, we're kind of tightening our belts just as everybody else is, just because of the extreme short-term moves that can occur. So the FOMC met this last week. You know, I cannot pass an opportunity to comment on them. They were very dovish. There essentially was no change in policy, of course. We have a 4.7% unemployment rate, at least in the U3, and they remain incredibly dovish. Now, you know, Yellen had a press conference afterwards, and during that press conference, she used the word uncertain 11 times. She should just use the word clueless. It's hard to believe that we have these 12 people that are running our economy that have no idea. And they've been in this grand experiment for 8 years. 0% interest rates. Okay, we're up to a quarter to a 0.5% Fed fund rate right now. It's just unbelievable. And then on Friday, Bullard, St. Louis Fed president, comes out and says there's likely to only be one more rate increase through the end of 2018. So this great experiment in this period of them just having no idea and waiting for data, well, it's likely to remain. And these bubbly markets that we're in could be highly volatile as we move forward. Talking about markets, bubbly ones or not so, let's take a look at our chart of the S&P 500. That's the ES. That's a 60-minute chart that has the overnight trading and the daily trading in it, and also has our notes on what moves the markets each day. Start out on Monday here. That gray area shows you that, of course, that horrible news out of Orlando and mass murder. We got a gap down in the market right over here on the opening overnight. It sold off and then came back, but you see, could not hold the rally. Eurozone down over 1%. Japan and China down 3.5% or so. And U.S. stocks fall with ES down 19 on the day. And the VIX absolutely soars. LinkedIn up 47 on the day on that Microsoft takeover. Incredible. We will talk about that in the next segment. On Tuesday, Eurozone down again. These Brexit polls were scaring everybody. FTSE down 1.5%. CAC 40 is down 1.7% in France. And the Brexit fears are really moving the markets. And for the first time, the 10-year German Bund goes negative. Incredible. U.S. stocks, well, they fall again. They get a late rally, as you can see right over there. But that flight to safety really starts moving up gold and bonds, and this FOMC meeting starts. The next thing is on Wednesday. Well, the equity markets put on a modest rebound, but man, they could not hold it. Everybody was waiting, of course, for the FOMC news to come out, and the news comes out here, and then late in the day, a ton of selling comes in on their incredibly uncertain attitude. Total confusion, and you can't blame investors for wondering about that. Still more concerned about the Brexit. PPI up 0.4%, stronger than estimated. On Thursday, the Eurozone down, Brexit again. All you're going to hear is Brexit, Brexit, Brexit. And then the Eurozone banks are under huge pressure. That's coming from the fact that there are no yields, and the banks have a very hard time making money. Our financials look like they were getting better, but then, oh man, they are getting hammered again. And the UK economy, just as they talk about it, stalling. U.S. stocks, they fall sharply early in the morning and then reverse as all of the flight to safety instruments reverse Gold, bonds, the dollar, they had all surged and then really gave up most or all of their gains. And there's these rumors coming out that Brexit vote may be delayed based on this Joe Cox murder. And CPI comes out at up 0.2% and only up 1% year over year. So, yep, inflation, we don't really have any yet. And here we are on Friday. I do this recording right around midday, and we have the markets choppy after being significantly down. Eurozone was up. Asia was firmer. Brexit news, they're talking about the polls improving a little bit. But the problem is really in the NASDAQ. U.S. housing starts, they fell 0.3%. How about flat since 2015? That's not so good. But really what's pushing the market today is the weak NASDAQ. Google, their Citicorp comes out and says their ad buys are down. That was bad news, and Google getting whaled. The big move for that stock today. It was down about 3%. It's now bounced back some. And Apple was getting sold also. The rumor is that all versions of iPhone 6 sales are being halted in Beijing, and this is a problem with one of the Chinese phone sellers that says Apple stole some stuff from them, and Apple's appealing it, and it turns out they're still selling everything there, and I guess until an appeal is over with, they can keep selling. And so they're getting a little more optimistic about that. That is bringing a bounce back that you could see right over here. But this market continues to be extraordinarily weak. We had looked for the market to trade down early in the week all the way through Thursday, and that's pretty much what we got. We'll talk about that in our short-term view of the coming week. We'll take a peek now at the earnings and economic calendar for the coming week. There's not a lot of earnings out there coming out. Before the opening on Tuesday, we get Lennar, CarMax after the close. We get Adobe, Federal Express, KBH. We get after the close on Wednesday, Bed Bath & Beyond, and Thursday, BlackBerry in the morning. So those are the earnings reports of the stocks of our 325 that are closely followed by us. As far as economic events goes, well, there's only one on here that's the standout. That's Thursday the 23rd is the referendum in the UK. I honestly don't know what time we're going to start getting any results out of there, even if it's going to be on Thursday. So once they do, you're going to get some big moves in the markets, and it may not even be till Friday. So we're not really sure about that. That will clearly be the biggest mover for the week for the markets, and there's not a lot of other ones out there that we think are market movers. So everybody will be focused on that. The markets could actually really slow down as we get towards Thursday. That is our opening segment for the week, and we'll be right back with the best and the worst. For the best of the week, in a week that saw equity markets under a lot of pressure, the best stocks on the upside were mostly things related to buyouts. We have to mention, first one, the biggest mover of the week by far, and a giant buyout, is LinkedIn. Microsoft takes the big gulp. They're going to pay $26 billion for this company, and analysts are calling this, some of them saying this will be the Facebook of business. It really already is. You know, there's been constant buying in there off that low right there, and we believed we were in a rising period, but holy cow, there's the price way up there. You can see that little dot up there for the week as the stock trades from all the way in the 140s all the way up into the 190s in just a couple of short weeks. And that is a big move, and LinkedIn will be part of Microsoft. Just a absolutely unbelievably great buy probably for them for the long term, and that really probably saves them from spending a lot of money on developing anything like this on their own. So expensive maybe, but good for them. I think it's probably a great move for Microsoft. Symantec, another one in here. They're up 17%. This one is buying Blue Coat. This is interesting in that it puts them in a little different business in internet security because now it expands them into networking and cloud services. And this company, small relative to the size of Symantec, but they love it. Look at this big move right over here. Comes in this rising phase, which is the perfect spot for it, but a big surprise. Usually when a company buys somebody out for a lot of money, and they pay $4.6 billion for this company. That's a lot of money for this company, expensive. They essentially beat an IPO. This company was going to have an IPO, and now it's not. And look what happened in Symantec as the investors just love this Blue Coat takeover. Here was where the slim ribbon turned positive right there. That's a good sign. And it was testing this area here of this island reversal on the upside. That's really interesting pattern, and then all this buying comes in. Note the shooting star right over here. So what that's telling you is that the stock has seen enough upside for now, and we wouldn't be surprised to see a pretty good retracement. All this buyout stuff going on. Investors don't want to miss the next one. So on the coattails of the LinkedIn move, we have Twitter moving up. We talked about this a couple of weeks ago, saying that there was what's called an abandoned baby. You see that red single bar down over there, the gap down and then the gap up. And we thought that would be the beginning of a nice upward move. We had abandoned baby. We tweeted that one out, saying that it looked like this was going to be able to get some upside legs, and there's your abandoned baby note, and gets this move. See the rising phase right in here, that blue line, and it gets right up back to that resistance zone right around that 89-day moving average. And one more buyout in here, QLogic, QLGC, as we get a big move in the upside here again, as Cavium buys this one out, so it gets a 8% gain on the week. So these were all big gainers. LinkedIn 41%, Symantec 17%, Twitter 11%, and QLogic now to be bought out as it held this moving average and gave you that buy signal there. That's pretty sweet. And that's up 8% on the week. Just one more favorable mention on the upside is U.S. Steel. That stock up 5% for the week. We're looking for a pullback in that stock right now. But Bank of America turned bullish on it. This one's got really analysts all over the place on it. As Bank of America upgrades it, and 2 weeks ago, some analysts said the stock's going down to $5. So who do you follow? Well, I don't know. Me. That's the end of our best of the week, and we'll be right back with the worst. Worst of the week, one that took a big hit, is Whole Foods. Down 11% on the week. Some interesting chart patterns here. And interesting news is the FDA sends a warning letter about contaminated food. Man, you got to think that investors are thinking about Chipotle when they've had this problem with contaminated food, and this is a bad pattern and a big hit. Let's take a look here first at the weekly chart. It's interesting that the chart in here, we were looking for a bottom to form actually, and if you look at, let me get my pointer here for you. If you look at this blue, we call that a timing spike here, you can see that each of them point to low periods on the cycles, right over here on the bigger ones actually. And that low came on time. You got the rally. It failed at just about the same place that it's been failing on these other rallies throughout this whole last year, and then it has this big hit on the downside. This is a bad pattern, And therefore it has our forecast in here showing that its declines way out here into October. So this is a bad pattern on this weekly pattern. When we look at it on the daily, well, there was no secret in here. We, as chart subscribers, saw this bearish island that we had put up there. You see the gap up and the gap down. And since that moment, it's really collapsed in here. That's a big decline from 35 and a half all the way down to 30 and a half over here. It certainly could get a bounce. We would call this oversold. And we look at that based on the projection oscillator down here. We're probably going to get a rally back up near this 89-day moving average, but we believe it's negative. We have the slim ribbon turning negative right in here, and that says that momentum is really turned to the downside. Well, that's obvious, and that is a bad looking chart. Also on the downside, energy, NRG, and appropriately has that symbol. This one is a utility essentially, and this one looks like it really has topped. Don't see any real news in here. This is the pattern that we're looking at right in here, and now it's turned over. So we kind of think that rallies in here are a sale. Take a look quickly at the daily pattern, and you will note that it's come down very sharply for a stock like this. It had this kind of a breakdown gap right over there on the downside 2 weeks ago, and now comes down to the 89-day moving average. 89-day moving average is often very important. You can see it was trading under it here and then came up and tested it. Here it tried to get close to it, couldn't, and now it's there again and getting a bit of a bounce. We would expect to see a rally up towards the slim ribbon over here, but then turn down again. So energy, bad pattern in there. As far as a couple of groups that have done really poorly, I mentioned the airlines. Man, they had a bad week, a really bad week. It's about the fears that terror is, back everywhere, and that people will tend to not want to fly, though the airlines have done a great job in making them safer, at least in this country and some other countries. The airlines had big hits, though, this week based on that, really in the area of about 8 to 10% on the downside, big declines. We actually think there's 2 or 3 more weeks or so of downside risk in here, and then we think that important lows are going to get made. We'll show you a couple of those charts, but American Airlines, we'll start with that one, which was down about 10% on the week, one of the bigger losers. And we'll show you why we believe that there's not all that much more time left on the downside. But note the big hits in here, as the stock, in the last year has come down from 56 all the way down to under 30 over here. And this is the patterns we're looking at. Of course, these are our cycle brackets, which are simply guides. And you can see in here this rally phase, that's this. And then it breaks down right under here, so it sells off for the whole period right in here. You can see that. The next rally phase and sell-off, notice how that follows. And guess what? It's going to bottom in the next couple of weeks. And each time you get to one of those rally phases, you can see that right in here and right in here, right? And right in here, right? Big rallies. So we expect a bottom to be made in here and a pretty big rally in that regard. You can take a look at JetBlue, JBLU, and you can see a similar pattern in here where we expect another week or two on the downside in here and then turn up also. These are some smaller cycle patterns than we were looking at in American Airlines. JetBlue down 8% on the week. We have Delta and Southwest both down about 9% on the week. Alaska Air down 9%. Notably, Alaska Air was listed by some analysts as one with the greatest margins and able to withstand some of the potential slowdowns based on economies slowing down or fears causing it. So that one was mentioned, and we think that one is going to bottom in the next couple of weeks also. So United Airlines only down 7% on the week, and that one showing a little better tone today. And again, we think that one is getting near a buy area. The other group that has continued to be weak is solar, And we'll take a look here at a couple solar stocks, SPWR. As these things have really been out of favor. This is an example of the charts that we have up that have our colored phasing in it, and you can see in here when we're in an area of a couple of cycle patterns pushing up, and we're in the rally, we're in the green phase. You can see that here and here, right there, right? And here we had a little green phase that failed pretty quickly, as did here, right in those middle kind of half cycles. So where are we right now? Well, we're coming down towards the end of these right over here. So you can see right here where two of them nested and bottomed. Look what happened. Where two of them nested and bottomed, look what happened. And two of them nested and bottoming right here. And that's our projection right there, as you can see, that we expect this to make a low in the next couple of weeks. Now, note that the PE on this stock is extraordinarily cheap for a stock like this. Forward PE at around 10, or less. If you look out to 2017, this stock earns money. This is a good company, and I think this is a very investable stock. The other one that we have really liked and we think is also extraordinarily cheap is CSIQ. This one's got a PE of 9 or less, forward PE. And here's where it made that bottom that we expected. Now, it looks to us like it's testing that low. And we think, as we have it drawn in here, that we're going to get another rally here in CSIQ. This one very, very related to China because they do a lot of business there, even though they're a Canadian company. So if you see China doing better, FXI, you'll know that CSIQ is a stock that can correlate with it. Navistar down 9% on the week. This one has been jumping all over the place. This is not a good action. This is not a good pattern in here. Well, I'll show you what I don't like. This pattern originally was positive. You see the rally in here and the sell-off right exactly where it was supposed to come. Then you get the next rally right in here on this kind of half cycle rally right there. You had the same thing happen right here, and you see it failed. This one looks like it's failing already, and that's why we have it projected down, getting back, somewhere under $8, but sometime out in the fall time. So this is a bad pattern, and we think that it will continue to gyrate, but trying to bounce today. But look at this island in here. This is an evening star. If you're a candlestick follower, these are high waves. That's a tweezer top. This is an evening star, and this is a bearish island. You see the gap and the gap? And so this is just horrible, and it's tried to get a bounce today, and it really couldn't go anywhere. Note the 89-day moving average giving it support, but we actually think this stock is in a lot of trouble, and we would believe that you have to sell it if it tries to pick its head up. That's Navistar, and that is the worst of the week. All right, before we get into the short-term view, I just want to remind you to go to our website and to look at our membership offerings, which is 7 different categories of videos, our rankings and setups, which we send out on a daily basis, and our charts that you're looking at right now that you can have right on your TOS platform. Also, we offer coaching for traders and consulting for hedge funds, so lots to go and see at slim.com. All right, we're doing the short-term view a little bit earlier today. I have to get this out a little bit earlier because we had lots of people ask us to do that. So we're going to try that today, and hopefully we'll get this out sometime near the close, a little bit after potentially. So every week I do this. I look at 5 different charts, different short-term charts of the light crude, gold, the euro currency as our proxy for the dollar, the bond market in ZN, that's the 10-year, and the SPX. And then also occasionally take a look at the VIX. Also, when I think it correlates, that's interesting to certainly to look at today. Take an accounting of how I did in the last week. this is back-to-back substandard weeks for us, so about 45%. And we really put that on the Brexit. We did not give enough credibility to fear, is what happened, and so there were some bigger moves in some of these flight to safety type investments than we expected. It made things more severe. Some of the patterns were pretty close to what we were looking for, but the magnitude of the moves was more severe. In the case of light crude, we had looked for down early and then a rally into midweek. It fell so hard that it actually lowered the resistance numbers, and that's what we're going to be looking at today. So let's take a look here at light crude on this daily chart. So note there's a big dotted line on there on the bottom. That is a big cycle that is, you can see the low right over here, and then the low right over here, and then it points to a low right over here. So in other words, when you're in places where there's downside movement is where you get declines. You can see that right there and what we're in right now. So we had really called for a top in the light crude market, and we were getting that, and it worked out really nicely. It got up to over 52, but trades all the way down to close to 46 and then bounces today. So our expectation was it was going to fall and then bounce and then fall again, basically. And the bounce came later in the week for us, and because of the level of decline, it lowers the resistance. So what we have in here now is the new resistance numbers, and that is what we expect to happen this week, is to get can see the rally in here that came late for us. Note it's on a 9th or 10th day, it depends on where you count this low, and note the continual 8-9 day cycles that are in here that you're seeing. So this rally comes right on time, but we don't think it's going to last. And why not? Because this pattern right in here suggests that rallies will fail. And so a move up into the minor resistance, that's 48.90 to 49.50, and we believe that is a sell zone right there, and that you'll get another move down right in over here if it gets up there. So that's kind of what we're looking for, maybe another day or two on the upside, and then a fail, and we should see kind of this up-down action, maybe a little choppy up action, and then moving again to the downside. Take a look at gold. Now, gold, we had thought that it would, start a correction, and that it would get up to resistance around 1284 and then move down. Well, the Brexit really made a difference in here, and you can see this giant shooting star. So we didn't expect it to do that. We kind of expected it to roll over right in here. So we don't get any credit for this at all. Then on Wednesday we said kind of a range that we're looking at is 1310 to down around 1260. We still think that's the case. So we're kind of looking for this kind of a range in here. Here's the 1260 support on that 50% number right there. And we think we're going to bounce around in here. We're actually looking for, you see these declining cycles right in here. This is the GDX. This is silver right over here, and this is gold right there. That says that this whole area in here potentially can have some downside, and of course we're coming into the Brexit vote, so it's likely not to give a ton of ground. There's those nested lows that you can see right over there that's pointing to there's a downward pull in here. And it might actually be, after the Brexit vote that you get some, if they vote to stay, that you're going to get some sharp downward move. We'd expect it to get under 1250 temporarily if that happens. So we're kind of looking for a week where it, chops around a lot, moves down, probably tests this area down over here, and then probably moves back up. So we're just calling this range in here right now of 1260, 1310, and we kind of think it is stuck in there. Next thing we're going to look at is the euro currency. The euro last week, we expected it to kind of be in a down-up pattern, and that's basically what we got, a down-up pattern, and that we expected it to test the support area that was at around 113 at the time, and it got a lot lower. And this was the buying of the dollar in that flight to safety that broke it in here, and also the selling, of course, in the British pound. So we thought it would be down up. It is down up, but the magnitude of the decline was different. So we only give ourselves half credit for that. And where are we right now? Well, we expect this resistance zone right here to hold it now, and for it not really to be able to get up through there. If it popped through, we think for a second up to 114, but basically we're looking at this area under the 113.40 number to hold any upward bounce. And then again, when we get to the Brexit vote later in the week, there's a potential for anything in there, right? So if the vote comes out good, then this is going to spike up. You'll be right at the moment, right over here, which is the right time. If the vote comes out bad, well, we expect it to spike down, complete the pattern, and then reverse back to the upside. So for the moment, until then, we kind of expect this resistance area to hold right around 113.40. So it's just a guess. We're going to call it a down week. And of course, that'll all change toward the end of the week, as we really don't know, like nobody knows about the vote. If the vote is delayed and there's a possibility of that, then you can expect a more positive action to occur, as the people that have been moving into flight to safety type trades will begin to reverse those. You'll see the dollar fall, and then you'll get a bounce in here. So it's important to watch the Brexit polls, of course. So the next thing we're going to look at is the 10-year note as we switch over right here. And again, we're only looking at daily patterns. Now, note the this pattern over here, there are two down here. The dotted one is the 30-year. So there's also a bigger pattern right in here. What this says to me right now is that the bond market is in an area where it should be giving up some minor ground on the downside, just some correction of this upside move in here, and into this area of some minor support. So last week we expected it to roll over by midweek and then test 130.24, which was the support. Well, we got that, right? Because we expected the stock market to sell off into late in the week. This happened just as we expected on pattern. However, it got much higher than we expected to. So the pullback, which we expected to be down to 130.24, way down over at just below this support here, is now changed because of the higher point that it made. Now, note this is a topping pattern in here. This rally day here, the shooting star doji, that's a harami, that's called, and then the down day here, if we hold the decline, that's an evening star form. So we're going to look for this to be a correction like into the midweek or a little later than that. Down into the support area here, it comes at around 131.10. And that might be all we really get. And again, no idea what's going to happen after the Brexit vote. And if it's delayed, then this will be weaker because the flight to safety people will be getting out of some of their trades. So it's important to take a look and see how this is acting as we get just before the vote. And I think that if you hear anything about a delay and you're short in here, you're probably going to be in good shape. So that is a look at ZN, and we're just, of course, again, we don't know because of the Brexit, but we think that we're going to get some sort of a pullback or before that to around 131.10. So the next thing that we are going to look at is the stock market. When we do that, we look at the S&P 500 SPX cash. I have a lot of people ask me, why do I look at the SPX cash versus looking at the future? We look at the future when we look at all of the news at the beginning of the show, because we're only looking in a 5-day window. The reason is because there are large discounts on the roll. So when that happens, it skews the charts. It throws everything off. And that does not happen in SPX. So the numbers are far truer when we look at the cash index. So we do all of our work on the cash indexes for the stock market, and then you can just convert that over to the futures if you are a futures trader. So for the last week, we thought that there was a 9-day pattern that was really powerful that was going to bring the stock market down through Thursday. And that's exactly what happened. It moved down lower than we expected, again, because of the panicky situation that's going on over Brexit and over terror. That had the market go down a little further, but then bounce strongly, basically right on the time that we're looking at. So you could see that 9-day pattern right in here, all of those lows right on day 9. And this, shockingly, is day 9. So what is this set up for? Well, this sets up for a rally beginning, if it hasn't begun already, basically now. And we're getting some pullback in here, and we certainly could come down and test, somewhere around those lows. The 78.6% got, close to there, but then it held. That is very important. Under this level right over here, that area around 2024 is a dangerous level. We would not want to see that because we think it would have a very negative meaning. So what do we expect for this coming week? We expect this minor resistance area to get tested. A rally right up into here. The target then would be around 2085 to 2094. If we didn't have the Brexit vote, we'd call this an up week coming, but we don't know what's going to happen Thursday, Friday. And again, if we think the polls are changing or there's a delay, we're sure it's going to get up into this area up over here. Now, at some point in the next couple of weeks out here, it's going to need to get sharply through there in order to hold the bullish structure that we have in the stock market. Now, speaking of bullish structure, for those of you that are members, if you haven't seen it yet, we did a video on Thursday comparing the Brexit. It's essentially news versus chart structure, and talking about the Brexit and the SPX, and I think it's very interesting. And I talk a lot about what the Brexit means because we've had a lot of people ask. So I would say that's a good opportunity. So we're going to, call this a test of up to this area and then move down. By the way, if you're not a member and you want to see the videos, level 3 members are only $33 a month, and there's a discount if you sign up for 3 months. So that is it. We've covered it all. You know what? I'm going to go back because a lot of people said to me, you didn't cover the VIX last week. And of course, this is the week that the last few weeks the VIX has really blown up as we were in a period where we were suspicious that could happen, but the stock market looked like it was positive. So we didn't really think the VIX was going to blow up. But of course, we didn't know that this was going to happen in the UK and affect everything like it did. This is the weekly chart in the VIX. And you could see the rising zone right in here, and it explodes up here past 22. We actually said we thought we'd see a 2022 VIX during this period. And if the UK votes to stay, well, this is going to plunge all the way back down here under 16. I can tell you that. In the meantime, it's already showing like it's giving up ground, and you can see in here that that big reversal that happened on Thursday brought you this big volatility in volatility. How's that? And that looks to us like a peak for volatility in this cycle, in this rising phase here. Note the rising phases right in here and how they bring you the rallies. This one, nothing, right? And then brought you this long decline. So at some point in here, we expect this to be a correction. And hopefully it's good news and the Brexit, fails and they end up staying and we get the market to move to new highs as we expect. And then we're going to get this move in here in VIX to the downside. We're just going to call this a choppy week coming up in the VIX simply because we don't know as far as this vote coming up. And again, if the polls do come out and show that stay is taking a lead, applied volatility is going to get crushed. So that's it. Now we've covered it all. I hope that you have found a ton of good information for you in here. You can send your comments to slim@slim.com and any questions that you might have about our services. Love to hear from you. That is going to wrap it up for the week. We hope you have a great and safe weekend. And we are always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been